5 easy double stocks for the next 5 years. So today we are going to review 5 stocks that have a very predictable way to double in the next 5 years. I'm Meli for Toko Alpha Mind, and in this video we are going to review these 5 stocks. So UNH, Alibaba, Google, Mercado Libre and PayPal, which all have a very predictable way to grow 2x in the next 5 years. So let's get started. So the first stock that have a very predictable way to grow 2x in the next 5 years is basically UnitedHealth Group, ticker symbol UNH. We have already seen in another video why UNH is today under a lot of pessimism, and this is actually a very great setup to actually 2x in the next 5 years. So today we have seen that for UNH that there are a lot of bad news. So investigation from the DOJ, higher medical loss ratio, change of management and tragic incidents within the company. But what we can expect is two things. First, the narrative and the sentiment around the stocks is going to improve drastically in the next 2 or 3 years. And on top of that, like UNH is going to actually perform a huge turnaround and going to come back to their standardized margin in 2026 and 2027. And so with all these elements combined, so we can definitely infer that UNH is going to at least double in the next 5 years. So that's why today, while we have a great setup, so UNH is at around 240, 245 at the moment. And in terms of EPS for 2026 and 2027, so what we can infer is basically around $20 and $22 per shares in EPS in 2026, and around $27 and $30 per share of EPS in 2027. So you see, it's very close to 2025, so like 2 years ahead. And still, if we apply a conservative multiple of 15 or like 17, we are already in the 500 territory, so which means a double. So if there is no cataclysmic incident for UNH, this is a very predictable way for UnitedHealth Group to actually double its stock price in the next 5 years. And on top of that, you will receive a 3% dividend, which is going to help actually get to your 2x returns with this stock. The next stock on this list is Alibaba. So Alibaba has been a stock that we have discussed multiple times, most likely because this is one of the AI winners in China and is going to continue to win in China. So it has a lot of tailwinds. So both in terms of AI and in terms of e-commerce. So first in terms of AI, so I think that more and more people are going to realize the scale and the incredible talent that they have in their team in terms of AI. And this is going to translate into huge growth for Alibaba Cloud. And we're going to see that this business is going to become more and more profitable. And this is going to change a little bit the sentiments toward Alibaba. And more people are going to buy these stocks and forget that it's a Chinese stock that they cannot invest in. So that's the first tailwind. And we have shown that with the Quant model, and we will see that in the next earnings for Alibaba. But definitely, this tailwind alone is going to push the stock beyond the $200. And then we have also the China economy recovery theme that is going to play on. And what we can expect is that with a lot of stimulus and a lot of confidence going back into consumers, so the e-commerce business is also going to recover and is going to grow like double digits going forward in the next 5 years. So definitely a huge plus for Alibaba with those two tailwinds. And what we can expect is that first, they are going to grow either like low single digit or at least double digit in terms of EPS. This is actually a pretty conservative assumption. And on top of that, we are going to see a revaluation of the stock because today it's trading at 14 times earnings, 14 times forward earnings. And we can expect that it will drive a little bit higher in terms of multiple if the AI story is actually developing very well. So definitely, I think that we can expect Alibaba to double from their level of 110, 120 to 200 and 250 in the next 5 years. Then we have Google. So Google is going to actually double in the next 5 years for mainly two reasons, in my opinion. Not financial advice, do your own due diligence. We have two things going on for Google. First, valuation, and then growth of EPS. So first, in terms of valuation, so today, Google is actually pretty low in terms of valuation compared to its historical average. So we can see some slight assessment of the valuation, so valuation expansion going forward. But this is going to play, I would say, a modest part in terms of the thesis. The main thesis for Google is that it's going to be an AI winner, meaning that they are going to be able to continue to grow their EPS by double digits. And what and how it's going to translate into the stock price is a double in the next 5 years. So today, Google is below 200, and we can expect Google to actually reach the $400 marks in the next 5 years or after 5 years. So in terms of growth of EPS, we also have two components. The first one is about buybacks. So Google is buying back 3% per year of the shares outstanding, and this is really going to help the EPS grow on a year-on-year basis. And then we have the organic growth of the business, and we can definitely foresee at least an organic growth of 12%, which is going to complement the 3% from the buyback. So 15% over 5 years is a double. And so 3% for the buyback, 12% for the growth of earnings. And this is definitely what we are going to see from Google, because Google Search, YouTube, Google Cloud, Gemini, everything is growing double digit at the moment, and we can foresee that it's going to continue. So definitely Google has all the elements to be able to be a double in the next 5 years. And I think this is a pretty predictable bet for that to happen. And definitely a huge, I would say, conviction on my side as well. Then another stock that should double in the next 5 years is Mercado Libre. So we have actually reviewed their earnings pretty recently. And the main reason why Mercado Libre is going to double in terms of stock price in the next 5 years is actually because their business is going to double in the next 5 years. And we have seen that growth rates of like 30 or 40% for their two main core business. So the e-commerce business and the fintech business. And this is going to continue in the next 5 years. And definitely what we can expect from Mercado Libre is a double in terms of business results. And we can also expect much more from that, given the growth rate we are seeing today. So a double or even a triple in terms of business. And today the valuation of Mercado Libre is actually pretty fair. So we are at around 20 to 25, I would say, normalized operating cash flow. And so if we keep this valuation that they have at the moment, and if the business is actually doubling or even tripling, so it's going to be reflected in terms of stock price. So the stock price today is around $2,300 per share. So we can expect something around $5,000 in 2029 or 2030. So I think it's a good bet, maybe not as obvious as the other one because there is a lot of execution risk, but definitely I think that if you want to bet on the next Amazon and a company that is applying all the playbook from Amazon, Mercado Libre is really a good bet and definitely a good idea to have in your portfolio. Not financial advice once again, but definitely to be checked out. Then we have another stock that should actually double very predictably in the next 5 years. Even though today this stock is kind of a dead money stock, it is PayPal, or what they call PayPal. And why PayPal is going to double most likely in the next 5 years? First, because they still have some growth in the business, and even the payment business is going to benefit from inflation, is going to benefit from the natural growth of the usage of all the different services from PayPal. And this is reflected actually in their total payment volume. This is reflected in the number of users that they have, and this is reflected in the number of merchants that they have. They're still growing like single digits, like 8 to 9%, and we can actually see their earnings grow to 8 to 9% going forward in the next 5 years. Pretty predictably, I think. And on top of that, the main story for PayPal is that they are buying back a lot of shares. So they are using all their free cash flow basically today for buying back the shares today at around $68, $70 per share. And so what we can expect is that if they continue to buy this amount of shares, so today $6 million for a $60 billion market cap, it's around 10% of the market cap actually bought every single year. So they are going to retire a lot of shares outstanding in the next 5 years if they continue this strategy. And definitely this is going to translate very well in terms of EPS growth. And so what we are going to see is that we are going to see a continuation of EPS growth at more than 15%. So today they are growing EPS at 18%. And we can expect that this is going to continue to actually happen in the next 5 years on a year-on-year basis. And this is going to result in a doubling in terms of share price for PayPal, even though the market cap is not going to actually grow that fast. So I think PayPal is also a very good bet today, even though that the stock has not moved much so far. But we have seen PayPal go to the $90 or $100 mark this year as well. So we can also expect a repeat of that going forward, and maybe in the next 5 years reach the $140 per share. Okay, so here you have it. So 5 easy double stock for the next 5 years. So we have seen that UNH, Alibaba, Google, Mercado Libre, and PayPal are really good candidates for easy 2x stocks in your portfolio. And if you're interested in the analysis like this one, please check my other videos, please subscribe, and I'll see you in another one. Bye.